When you think about who's in charge of a commodity, your mind probably goes straight to who's digging it out of the ground. But with silver, it's a totally different story. The real power is somewhere else entirely, kind of hidden in plain sight, right inside the market's own structure. Okay, let's dive into this.
So who's really got their hands on the levers of the global silver supply? Well, the answer is way more complicated and, honestly, it's concentrated in a way that might just surprise you.
Okay, so if you just look at the surface, it seems pretty straightforward. This year, you've got Mexico, China, and Peru leading the pack, producing over half of all the mined silver in the world. So that means they're calling the shots, right?
Yeah, not even close. The countries pulling the metal out of the ground, they aren't the real power players. And to get why, we've got to look at how silver actually gets produced.
And that brings us to the first big secret here. It's not some shadowy government agency or a secret cartel. Nope. It's something baked right into the mining process itself, a kind of trap for the silver supply. Okay, now this is where the whole story just flips on its head. Get this, a whopping 72% of all silver isn't even mined on purpose. It's just a byproduct, kind of an afterthought when miners are really going after other metals.
And this is the heart of the problem, right here. See, for primary silver mines, it's simple. Silver price goes up, they mine more. But for that other 72%, its supply is completely tied to the price of totally different metals like copper, zinc, and lead. So if zinc prices tank, zinc mines slow down. And silver production just drops right along with it, no matter how much we might want or need silver.
And on top of that, it's not even countries controlling the mining. It's a surprisingly tiny group of companies. We're talking about giants like Fresnillo, KGHM, and Pan American Silver. Just a handful of these behemoths dominate the entire physical output.
So, what's the bottom line? Just 10 companies. That's it. And they control about 40% of all the silver mined in a year. This isn't some grand government strategy. It's pure corporate control, and it's all about their bottom line, not about what the world actually needs.
But, mined silver is just the raw stuff. So let's go to the next level of control. We're talking about the market's gatekeepers now, the refiners and the exchanges, and let's see how they flex their muscle.
Think of it in steps. First, miners dig up the raw stuff, the concentrate. But then you have refiners who have to purify it into those silver bars we all recognize. And then you have the exchanges, the places that actually decide what it's worth. Every single one of those steps is a potential bottleneck, a choke point where the whole supply can get squeezed.
And this is where you can really see that control in action. The refiners, for instance, they pretty much have a monopoly on the infrastructure, and guess what? They are running flat out. We're talking delivery delays stretching out for months. Then you've got the COMEX. It's the main place for trading silver futures, and it only has a tiny 47 million ounces ready for delivery. That's not a lot. And over in London, the LBMA, it's just as bad. Their inventory is shrinking, and nobody can get a clear picture of how much metal is actually there.
Hey, before we get to the final, and honestly, the most powerful player in this whole story, if you're finding this interesting, do us a favor and hit that like button. Share this and subscribe so you don't miss what's coming next.
All right, so we've talked mines, refiners, exchanges, but beyond all of that, there's the ultimate level of control. We're talking about massive concentrated ownership by folks who have been silently stacking physical silver for years.
Okay, first up, you've got your ETFs, exchange-traded funds. These funds, like the big iShares Silver Trust, are sitting on over 600 million ounces of actual physical silver. And this isn't silver that's being used for anything. It's just locked away in a vault, completely taken off the market, which of course makes the available supply even tighter.
But here's the crazy part. Even that huge number, it's nothing compared to the single biggest holder out there. So who is it? Who's holding the ultimate position that makes everyone else look small?
Well, according to industry reports and people who watch this market like a hawk, there's a single entity out there holding up to 1 billion ounces of physical silver. Let that sink in. 1 billion ounces. That is more than the entire world mines in a whole year.
And this massive pile of silver, it's been quietly built up over more than a decade by one single bank, JP Morgan Chase. Yeah, one bank could be holding as much as 9% of all the silver that exists above ground, anywhere in the world.
Look, when one single player holds that much of such a critical metal, it stops being just an investment. It's what one analyst called it perfectly. That's not a position, that's control.
At that point, you're not just influencing the price, you can pretty much dictate it.
So what you have now is this extreme concentration of power, and it's created a system that is just incredibly fragile. The whole market is basically balanced on a knife's edge, all because of a huge and growing imbalance.
For 4 years running now, the world has used up way more silver than has been produced. And this isn't just some weird one-off thing, it's a structural deficit. We are literally draining the world's stockpiles year after year.
Just take a look at the numbers for 2024. Demand is off the charts. 1.16 billion ounces, thanks to things like solar panels, electric vehicles, all our electronics. But the total supply, that's everything from mines and recycling combined, it was only 1.01 billion ounces. That shortfall has to be filled from somewhere, right? And it's coming out of those already shrinking inventories.
So let's just quickly recap the big weak spots in this whole system. First, that huge chunk of silver supply, 72% of it, is basically a hostage to the price of other metals. Second, the refiners are already running at full throttle. They can't make it any faster. And third, the big exchanges that are supposed to guarantee the market, they're running on fumes, with razor-thin amounts of physical metal.
And all of this, it all leads to one final really critical question. With the world's stockpiles just draining away and control of what's left getting tighter and tighter, what happens when one of these weak links finally snaps? What happens when the whole system breaks?